Today's market call is presented by FactSet, financial data and analytics powered by tomorrow.
It's Tuesday. It's May 6th. Do it for Johnny, man. Why do I say that? Because we actually went to see The Outsiders a couple weeks ago as a birthday present for one of Linda, my wife's friends from childhood. So we went to see the show. Do it for Johnny. It's actually sort of fun. But I only what's that?
Matt Dillon character.
Yeah, exactly. I love Matt Dillon. The only one that was sort of poorly cast was the kid from Ralph Macchio's.
See, you know what? I can complete your sentences. I mean, what a list of folks though in that movie. Swayze was amazing. You know, Emilio Estevez,
Tom Cruise.
Leif
Garrett played a Soch.
Yeah, but you know who you loved? I know who you loved.
Yeah, Diane Lane.
You know. Well, you grew up in the
Cherry Valance. No, we used to, it's
side of that would you have been on? Like, which you would have?
I was a greaser. No, I'm not a Soch.
Oh, greaser, really?
Yeah. No. I mean, I grew up in northern Westchester, man. We were rough and tumble.
S.E. Hinton, okay. Yeah. All those movies supposedly took place in Oklahoma.
Oklahoma.
Sarah, my wife, you just mentioned Linda Snow, your wife. When Sarah was growing up, she grew up in Tulsa. She was an extra in, what was that other movie?
Rumblefish.
Rumblefish. She was, I've never seen the movie, but there was a bunch of kids on the bus, and she was a kid on the bus. How's that? She was in middle school.
Kid on the bus.
Stuff. All right, should we do this, guys?
Listen. Sorry, Amanda. Amanda, by the way, is doing great. It is market call. It's now 11:02 a.m. on Tuesday the 6th.
Yeah.
I'll stop pounding on the desk because it pisses Jacob off. But as usual, there's a lot to talk about. And I started with Do It for Johnny because, gold sold off the last week and a half, 2 weeks for a slew of different reasons. But, you wake up and it's back on the horse. We'll discuss that. But let's get into it because to me, Dan, the most interesting amongst many things, Paul Tudor Jones on Squawk and Friends or whatever show he was on this morning. And you don't have to listen to me. You don't have to listen to Dan. But people like Paul Tudor Jones, you should listen to. You don't have to agree with him, but you should listen to him. And he's saying some of the types of things that we've been saying. As much as people want to make this about tariffs, even if he were to ratchet things back, the market is probably going to make a new low. And I think we've been saying pretty much the same thing now for a while.
Well, we said that yesterday. We were talking about the tariffs, right? So we came in and there were 10% tariffs on China. Those were kind of holdover from, let's say, 5 years ago, whatever that was, right? Or 6 years ago, I think it was. They went on in 2018. The Biden administration kept them on. The Biden administration ratcheted up some of the export controls on tech and the like here. Trump comes in. He immediately throws a 20% extra on, but then ratchets it up to 145%. So a lot of stuff going on there. So that threat of 145%, it's gone into effect. I think, was it about a month ago, Guy, or something like that? And so, that has caused a lot of ripple effects. You had a great conversation with Stuart Sopp, good friend of the show, good friend of ours personally. He's the CEO, founder of Current, which is a fintech company, and they have a really good sense of what a lot of consumers are doing. They see the data, that sort of thing. And you guys talked about this. I'd go listen to this in the Risk Reversal podcast feed. There's been so much disruption in such a short period of time, even in March, in the lead up to the threat of these tariffs. And then since then, so it's a really hard thing to undo. And I think what PTJ is saying right here. And Guy, when I'm done, will you give people a little 411 on this guy? Because if you're kind of new to the market's a pretty important voice. But even if you were to ratchet those 145%, down to 50, it's still a massive disruptive sort of, kind of mechanism towards global trade and the like. So why should we be listening to Paul Tudor Jones, Guy?
Well, everybody knows Robinhood, the trading platform, but he started Robinhood to the extent that you're familiar with the charity. That's from Paul Tudor Jones. And in my world, my prior world of commodities trading and currency trading, I mean, he is a legend. He's sort of the Mickey Mantle of what we used to do. And his voice is one that a lot of people listen to. He's a great sort of macro thinker. He sees the entire playing field to the extent that people have that ability still. And I think he understands at a very granular level what all these different inputs mean to all these different markets. So when he makes a comment like that, people say he's talking his book. He probably is. And quite frankly, you want him to be. You want him to be sort of putting his money where his mouth is. But he's not just doing it for those reasons. I think he's doing it because he wants to be thoughtful, and he wants to point out to people that, despite all the noise around tariffs and all those different things, there are other forces or other factors at work. So again, when a guy like Paul Tudor Jones says something, you don't have to agree with him, Dan, but you should absolutely listen to him.
Yeah, no doubt. And he's also one of those folks who's not squawking every day, right? Like
No,
he's
he's
out
not.
there maybe once a quarter and, kind of like David Tepper does. And they usually, we could have said the same thing about David Tepper of Appaloosa. And listen, I don't even think this guy has a strong political stance. And some of these guys you saw line up on political lines, right? Like that sort of thing. But you're seeing this even like a Ken Griffin who runs Citadel. I think a lot of folks want to listen to what he has to say here and there, not lining up behind the president and the MAGA agenda. You also, I don't know if you saw this, one of the Koch brothers, the one who's 90 years old,
I actually do know him.
yeah, I know you know him. There was an article in the New York Times today talking about how in a public appearance that he made at the Cato Institute, which is a libertarian that they funded, he and his brother, I want to say going back 50 years, really talking about getting back to some of the roots of like real, like hands-off capitalism, that sort of thing. And we've been talking about giving a lot of examples of how the administration likes to pick winners and losers, put their thumb on the scales, that, conversation with the retailers, like we set the prices, all that sort of stuff. I mean, that's what these guys want. They want what is a more even playing field. And you could go back to the last administration. You could make the same arguments the opposite way. You know what I mean? About the Biden administration. So here nor there, if we're going to have like this true sort of, democracy, we also have to have a true form of hands-off capitalism. And I think, for the last, call it, whatever you want to say, we actually haven't had that for the most part.
I think that's, and to your point, that's true across party lines, without question. And, you mentioned a guy like Paul Tudor Jones. If I had to guess, we're probably similar. Well, the only thing that makes us similar is we both breathe oxygen, and maybe in terms, he's probably a Republican by, registration, but he probably is far more moderate and, sort of leaning almost left a little bit in terms of some of the things that he thinks about. And if you want to look up Robinhood, but, his politics notwithstanding, I mean, you should listen to a guy like that. Now, let's go to the next slide, because this is from Goldman Sachs. And I think what they're trying to point out is, we're at a point now where the market can go one of two ways, depending on, where we think we are. The black line is what we've basically done. This is where we are right now. The average correction is the red line, and you can see how that sort of accelerates. And then the average correction with the bear market, obviously things sort of go the other way. So what you have to try to make a determination of is, where are we right now? And we're at this sort of crossroads. And I think we're at a crossroads, not only in terms of the definition of whether this is a bear market or this is just a continuation of a bull market, but we're at a sort of inflection point in terms of the fundamentals. And we've pointed it out. If Amanda wants to go to the next slide, the S&P, and we talked about this yesterday, we basically traded up to the 200-day moving average. And today, at least at 11:08, it would appear as though we were rejected there. So a lot to figure out here, Dan. I think where I stand. I think there's going to be a continuation to the downside. We just talked about Paul Tudor Jones. Other people think we're going to go flying through there. That's what makes markets.
Yeah. Go back to the Goldman thing for a second. I listened to a podcast. Maybe Jacob can pick it up. It's called from Goldman Sachs. It's a really good podcast, actually. And I'm totally, let me just find it for a second here. Rob Kaplan, the former CEO of the Dallas Fed. He was there from 15 to 21. And now he's a vice chairman at Goldman Sachs. It's called Goldman Sachs Exchanges. And this is one I listened to. Obviously, we have great partners in RBC and they have strategic alternatives. But this one was a bit more macro from Goldman guy. And, he was talking about, he was asked these questions about, the probabilities of recession, what it looks like, sort of certain activities. It was actually a really good conversation. And here's another guy. He served as the CEO of the Dallas Fed under the first Trump administration. And he seems to be, at least maybe if he's not coming out, directly and saying it, there's a lot of like talking out of both sides of your mouth. But I think if you see some of these people who had, roles in the prior administration and they're speaking this way, you can tell that they're not 100% behind at least the rollout of the policy, but probably the policy too. And I just thought that was a really good conversation. The other thing I'll just mention, because they were talking about the lead up into tomorrow's Fed announcement, right? He's basically saying, this is Kaplan, that the Fed obviously is going to sit on their hand. Last time Fed Chair Powell spoke, he gave a kind of firm message more about inflation than he did about economic weakness. And we've been saying this for a while. We're not economists, and we certainly didn't serve on any Fed boards or this and that or whatever. But right now, this uncertainty around trade going forward really puts the Fed in a box. And then you have this pressure on them from the administration. And then it's going to be quickly what is going to happen in June, which is one reason why I think at the presser guy tomorrow afternoon, you might see some volatility after that. Like the expectations are very low, obviously, for a rate cut. And a lot of folks think that, he's got to stay pat. But if he gets more hawkish, you know what I mean? Who knows what that means for the market? That goes back to December 18th after the meeting there. So I thought it was really interesting. Last thing, there are 7 Fed governors, and I think there's a handful of presidents, and the Fed chair, okay, he votes, that's Powell. All the governors vote, and then there's a handful of presidents, and I think it rotates and votes. So you need a majority. He said that Fed Chair Powell usually he's fine with like 2, possibly 3 dissensions. And you know this, you track this every other month when they have the meetings or whatever, 10 times a year. And, last one, there was 3 dissenting views, that sort of thing. So it'll be interesting to see if for some reason the political pressure starts to mount on some of these Fed presidents or governors, that sort of thing. So that's something to keep an eye out. I've never gotten that granular about it, but I thought it was an interesting conversation.
No, it will. Yes, you're right. That's something that will absolutely be fun to watch and listen to and see the market reaction. By the way, Jacob said he'll put that Goldman Sachs podcast in the description here to the extent people want to listen to it. I think they should. Look, again, I think this Jerome Powell learned a lot from the first Trump administration, the 16 through 20 Trump administration. I think, if I'm not mistaken, Jerome Powell was put in place in early 2018. And, I think he was getting his feet wet in the job. The market scared him. He was getting beaten over the head pretty much almost on a daily basis by the administration. And I think to a certain extent, we talked about it at the time, I think they acquiesced. And my sense is, although he's never made comments to this, I think he probably regrets it in some form. And not that he's trying to make up for it now, but I think he really wants to stand firm in the beliefs and the beliefs of the other members. And I think the right thing, this is just me, by the way, I think the right thing to do is sort of just toe the line and continue to do what they're doing and wait and see. There's no reason, in my opinion, there's nothing compelling out there that suggests we should be lowering rates. That's just me. Go ahead.
And really quickly, in all the data that we're starting to get, it might look okay. You know what I mean? That was like the jobs number. But one of the things that stands out amongst a lot of these surveys, whether it's of consumers, whether it's small businesses, whether it's C-level suites on the high, is inflation expectations are rising.
Yeah.
And that's the fear, right? You got down to below 3%, and that was really close, right, to their target. We talked about the cumulative effects, and now you have the uncertainty in and around trade. So if inflation expectations are rising, that has the potential to weaken demand. It has the potential on the corporate side to weaken CapEx and R&D, and then starting to think about hiring, right? All that sort of stuff. And then consumers will just push back or push out big expenditures at a time where supply might be really bad. And then you have the situation of stagflation. We've been talking about this for 2 years.
Yeah. Look, I mean, it comes down to, and we're going to move on, but it comes down to, what you view the role of the Fed is. And I don't think the Fed's role is to cure every problem that sort of crops up. And I think that's what they've been trying to do over the last, 15 or 20 years. That's just me. Real quick, and I don't know the answer to this. And Chris L is asking, he's saying, can Dan or Guy opine on the record buybacks we're seeing? I didn't know there were record buybacks, quite frankly. I mean, maybe we can put it in Perplexity or something and see. I have no idea. So I'm going to keep talking while you plug that in. But, it would surprise me if, in fact, we are seeing record buybacks. But if we are, I mean, we can definitely opine about that without question. The next thing we should talk about, as Dan continues to look that up, is the VIX. And Amanda pulled up this great chart from Charlie Biello. It's a little bit hard to sort of figure out, but this is what I'll try to sort of make the takeaway. Right now, we've seen the second biggest decline in terms of the VIX in a 4-week period in history, 50% basically. The biggest decline was in the summer of 2016 when we went down 53%. Now, that's the numbers. Now, you look to the right and you can see the majority of that table is green, suggesting that when you have an environment like this, when you see these types of declines, the market tends to do pretty well in the aftermath. Now, obviously, there's some gray bars there because, this is a 5-year, this is a forward return, 1 year, 2 year, 3 year, 4. Some cases, you'll see the gray because we haven't gotten out to 3, 4, or 5 years. Other cases you can see, we went back to 2024, and that's obviously just, the fall of last year. So there's some blank spots there. But my biggest takeaway here, Dan, is when you have steep declines like this in the VIX, historically, it leads to pretty decent returns in the back end. We'll see if it's different this time.
Yeah, no doubt. Great question there, and it's not something that you and I were particularly focused on, but going into Perplexity, and we'll put some of the citations. And this is really important when you're using these large language models, these kind of whatever you want to call them, these new AI search engines. It's giving you what I think are great narratives, but you got to double check some of the citations because they have the ability to kind of hallucinate, that sort of thing.
Hallucinations.
Yeah. So 2024 was a record year, $943 billion. Projections for 2025 suggest this figure could surpass 1.1 trillion. Some of the considerations: strong corporate cash balances, we got that; steady interest rates, making it attractive for companies to return capital to shareholders through buybacks; tax and regulatory considerations, with some firms accelerating buybacks ahead of potential changes to Tax Cuts and Jobs Act, which is set to expire. I don't know why that would be. A lower tax rate means you're going to have greater you know what I mean, like that sort of thing. But these are one of the reasons why you got to challenge some of these things.
Well, and I'm trying to think about it. And listen, it's certainly not bearish. I don't know, though, if it's as bullish as the numbers suggest, because I think with each passing years, these companies in terms of market cap grow. So the numbers in terms of the buyback, by definition, are going to be higher year over year, if that makes sense. I mean, we just saw a ridiculous one, I think, out of Facebook in terms of the absolute amount. So a lot of it's just a function on the market cap of the companies in the first place. But with that said, I was not aware of that. So I'm glad. I mean, we can learn something from the audience as well. But I think, listen, it's not bearish. I don't know, though. I don't want to make it out to be on the margins, I guess it's a little bit bullish, but it's not, to me, overwhelming. It's not an overwhelming reason to be bullish. That's just me. So that's that question. We did the VIX, and, we talk about this vol crush that we've been seeing. But with that said, Dan, you still have a VIX that at least is still elevated at 24. You're still at the lower end of what we've seen over the last couple months, without question, but it's the higher end that we've seen over the last couple of years. So you pick your poison at this point.
Yeah, I mean, this is one where I'm just going to throw in there. We've been talking about this. I'm going to do the VIX, and I'm going to do the 10-year yield. Like, those are the two things that kind of interest me. So if the VIX is measuring the volatility of the S&P 500, and if the 10-year yield is the thing that, if it were to go up precipitously, as we've seen over the last month or so, is going to cause downward volatility in the stock market, I want to look at both of these equally, if that makes some sense. And the dollar too. We could throw the dollar in there. Let's look at the 10-year yield, because one of the answers that we just got from Perplexity about the buybacks is steady interest rates, right? And we're going to see how steady they are tomorrow afternoon, but this is trading at the exact spot it was a year ago. There's been volatility in between, and that's kind of assisted with some of the volatility in the stock market. So tomorrow could be really interesting, because the Fed chair is going to get lots of questions. Maybe, and listen, it's going to center around inflation, and it's going to center around, when do the cuts come? What will be the kind of where does the rubber meet the road for inflation and full employment? You know what I mean? Versus bringing interest rates back.
Well, I think he's pretty well equipped to sort of handle it. Again, I don't think he was necessarily in the first go around. I think this time he will be. The market might not like to hear what he has to say. The administration might not like to hear what he has to say, but as one of the biggest Fed bashers out there, I mean, I'm sort of encouraged by what I've been seeing over the last few months. This is an interesting question from Mike B. This market needs to at least see one tariff deal confirmed. If no tariff deal in May, this market will crash. That's more statement than question. I don't typically like to use the word. We'll talk about crashes in terms of individual stocks because they happen, but we don't like to be hyperbolic in terms of the broader market because it's just doesn't do anybody any good. But I do think you're right. I mean, there are a lot of people writing about trying to get ahead of these stories about the deals that are coming. I think India's out there. Obviously, I think there's some positive news on the Canadian front over the last 24 hours. So, yeah, I think the market's in search of something. But, it all comes down to what's going to happen with the Chinese. I mean, that's the game. Everything else to me is just sort of conversation. The Chinese thing is sort of me the big one. And I don't think we're nearly as close as the market might want to think.
Well, it's also interesting to see Mark Carney, so the newly elected prime minister in Canada, supposedly having lunch with Trump right now, or will be in the next, hour or so. It'll be interesting to see what comes out of that. Mark Carney was elected on an anti-Trump platform, right? The Canadian people were pissed about a lot of the kind of narrative, excuse me, and let's see, because he's got a very fine line to dance. Like the last thing he wants to do is get in an all-out, like verbal sort of like pissing match, you know what I mean, with him. And it doesn't serve anybody that well. But Trump, with him, might is right. Right. So like, how do you do this in the background and try to figure out what a nice, kind of solution is to this trade war and make Trump feel like he's getting a win,
Yeah.
And you've been saying that. So this one's going to be really important, because if Carney goes back up to the Great White North and, and Trump's like tweeting almost immediately, the situation with Amazon last week's a great example, is that, the administration got really pissed at Amazon. They didn't really know what they got pissed about. Then, Trump personally calls Jeff Bezos, right? And Bezos backs down and gives him all these assurances. And then he's immediately tweeting out, we had a really nice conversation. He's a really lovely guy, or, you know what I mean? That sort of thing. So it's not really hard to get those sorts of things, you know what I mean? To get those sorts of responses. So the Carney thing's important to me, because if there is no deal there, you can't get it with your closest allies, your biggest trading partner. To your point, China's going to take a long time. You know what I mean? And then Trump's also said that it's going to be on his terms. You know what I mean? Like the way in which they dial things back, which is not exactly, we have Stephen Roach on all the time. He was the chairman at Morgan Stanley for a long time. I think he's at isn't he at one of the big PE firms or something like that? Just China.
I have to look and see where he is now, but I mean, he's the foremost expert in terms of our relations and how you trade around these things. Yeah.
Well, that's exactly it. Is like saving face is one of the biggest things. You know what I mean? For their culture, I think. You know what I mean? So that'll be interesting. And to your point, this is what we started with the Kaplan thing and everything like that. It's like China's the main event, and if they could get some of this stuff with Canada, Mexico, EU, and Japan out of the way, we're going to be in a much better situation to deal with China.
Yeah, and so you mentioned yields, and again, as you said, here we are, 434, where we are. We're basically been going sideways, but there's a lot of volatility in there, and I think it's confusing a lot of people. I think the bond market's trying to figure out, but one thing that isn't confused is the gold market, and we started with that "Do It for Johnny," and that's the reason why. Because as I mentioned, gold sold off, and it sold off on the back of, I think, the president sort of backing off the Jerome Powell rhetoric in terms of firing the Fed chair, and I think, the market breathed a collective sigh of relief. You saw it in the move in gold lower, but here we are, a week or so later, and it's getting right back on the horse, which this is just me, and I'm not putting words in your mouth, and people should make their own observations and interpretations, but the gold market getting back on its horse the way it is should be concerning. It's telling a story. And again, the dollar, which bounced, is seemingly back under pressure. And we talked to a lot of people. I talked to Mike Novogratz yesterday, which dropped today. Novo thinks dollar yen could get down to 130, and he still thinks the overriding trade is to be short the US dollar. And what we've seen in the broader market is just a bounce, off an oversold condition and off a trend line, which he actually talked about in our conversation yesterday as well. So that's another thing folks should listen to, because again, say what you want about Novogratz. I mean, he's got his finger on the pulse, Dan.
He definitely does. Great conversation there. That's in the Risk Reversal podcast. Hey, I want to mention one thing, and maybe Amanda has this up, because we've gotten a bunch of questions of this, and we have a discount code specifically for our listeners. Fast Money Live. It's June 5th. It's at the NASDAQ. It's from 4 to 8. You come in, you do a watch party, but there's also Q&A with our producers and Melissa before that. Then there's a Q&A with the panel after the show. Then we have cocktails. We spend a lot of time talking to the folks here. So we have a discount code. It's a really nice discount. It's FM25, I think, caps. Go to the website here. Let's just look at it really quickly. What is that website here? There's not many tickets left, by the way. And so we've already had a bunch of our listeners, our viewers, sign up for that. So we'll put that in the show notes. Maybe they can show, Amanda, can you show the the website here, how to get to that. But really fun time. We did one in February, Guy. It was awesome. So
It
go
was
check
fantastic. I think there's Mary Duffy, who Mary's sort of the overseer of everything at CNBC in terms of events and things. She just texted us earlier, and I think she said about 7 or 8 tickets left. They have a max they can do for fire code reasons at the NASDAQ. I mean, they can sort of fudge a little bit around, and they've been trying to save some things, but I think there's 7 or 8 left. And listen, I get it's a lot of money, and we do have a discount code, which is great, but it is a fun thing. And I know it's fun for us, but I also know that everybody that went the last time had a really, really great time. You get there at 4:00, you meet Sandy, our executive producer, you meet Melissa Lee, then we'll come in and out during the show. I was in and out a few times with the audience. Tim Seymour came in. We do a half-hour Q&A that lasted a little bit longer last time with all of us, and then a cocktail reception that lasted a little over an hour last time, and quite frankly, it would have lasted longer. So it's fun, and you get to meet a lot of really cool people. I think there were people from 31 states last time, as far away from Hawaii and Alaska. Somebody came in from Ireland. This year we have somebody from Australia. I think we're up to 32 states, if I'm not mistaken. So it's a neat thing to do. And, listen, we understand it travel's a pain in the ass in this environment. We totally get it. And this is a lot of money, but it's also fun. It was a really, really fun event. It's one of the more enjoyable events we've had in a long time.
Yeah, Guy, you just said it, though, before. We learn a lot from our listeners, from our viewers. It's really amazing for us. We sat there for an hour, drank some Comos tequila. I think all of us got to talk to maybe, a couple dozen of the people there and listening to their questions. It's always really interesting. It helps inform a lot. Guy, here's one. All right, moving on there. Go check it out, fastmoneylive.cnbc.com. You see the promo code there. It's capital F, capital M 25. So our offices, our studio is in the building where Palantir is. Palantir. It comes out PLTR. That's the ticker. We were previewing it yesterday. We're talking about 13% implied move into their earnings. It's interesting. It's down 13% or so. On Thursday, CC Lagater, our main man, who writes our newsletter, and he's a options trader of 25 years or so. Great, really smart bro. He's going to be on this program with us. We're going to talk about some of these kind of options. You might call them anomalies if you're not close to it, but the idea that the options market was implying a 13% one-day move and the stock is down 13% is kind of interesting. We'll go through some of the reasons how that can happen. But you and I were talking about this yesterday, Guy. Forget the valuation. We don't need to talk about it. Both of us, from a technical perspective, you said the mother of all double tops, okay? And then my comment was, and you could say that I've been saying this for months, but this is an accident waiting to happen. And, when I say that, it has a lot to do with sentiment, has a lot to do with valuation, has a lot to do just of the scale of this business, the dependence on government. You also saw on the flip side of that, Guy, if we're starting to see some of our allies kind of push back at this whole idea of American exceptionalism, and you know what I mean, like we're going to get more protect. Well, they may not want to kind of, buy services from a company that is a huge U.S. government contractor, right? Like, does that make some sense? Now, the flip side of it, you could say, is that because Alex Karp and Peter Thiel is one of the largest shareholders, a co-founder of this, and Alex, Karp, a really brilliant guy, is a CEO, co-founder, that sort of thing, is telling a really good story. But, there's two sides to every coin, and that could be how this thing kind of shakes out a little bit.
So that's the chart going back about a year or so. If Amanda, that's by the way, a static chart, and Goldman Sachs still thinks there's more downside, and I agree. But if you do a longer term chart, Alex Karp was telling the same story for years. Then the market just chose not to listen to him until sort of the advent of AI and a couple other things, and then it was sort of this rocket ship move. Palantir, as you know, it was the P in my hope trade. So I loved everything about Palantir, but in my wildest dreams, I didn't think it was going to trade to the levels it did. Forget about the stock price, just in terms of the valuation, which made no sense. And, that move we saw basically earlier this year, we talked about it. We said, you said it, it's probably the worst looking, it's most ridiculous thing you've ever seen in terms of price to sales. Stock gave up half those gains, which made sense, traded down to the 200-day moving average. We thought that could happen. I did not think it was going to trade back to the prior highs, but when it did, as you said, we said, you have to move your feet here. You have to do something. It could wind up gap opening higher, absolutely, but to stand and wait for something in this environment didn't make a lot of sense. So that's proven to be, at least at 11:30 this morning, correct. I do think there's a chance we do the entire move once again and trade down to the moving average, which at this point will probably be about $72 or so. With time decay, that line gets higher, but the valuations, as you pointed out, it just doesn't make a lot of sense. And in terms of the business, they were very dependent on government contracts in their early days. They sort of moved into, got some small and medium-sized businesses, which gives them a little latitude in terms of the valuation. But with even all that said, the valuation makes no sense.
It is amazing. So we were talking about this yesterday, Guy. The stock, so estimates have gone up for 2025. I think we're looking at 36% year over year earnings growth. And now with the guidance that they gave us 40%, 23% for 2026. So we were talking about a 77 times sales. Well, with the stock down 13%, it's now 67 times sales, right? So the lower the stock goes, we will see some movement in that sort of thing. And then from a revenue standpoint, we're expected to see 35% growth, which is ratcheted up just a few percent there too. So again, higher guidance, lower stock, maybe it's maybe it creates a condition where it looks attractive, but I just don't know why anybody would be buying the stock, especially if you consider some of the back and forth that we just laid out there. All right, Guy, this is a really interesting one. It's kind of a different sort of thing that we do for Chart of the Day, but this stuck out to me. This was a few days ago from Bespoke, and I just really kind of wanted to highlight this because we were talking about that GDP print last week, contribution to total real GDP growth. And this is quarter over quarter percentage points, non-residential fixed investment in IT equipment.
That's a staggering number.
Yeah, look at that. I mean, so we've been talking about this, and again, we're, sometimes pretty non-scientific, but we've been suggesting that a big part of GDP has been, at least the growth that we've seen over the last couple of years, if these companies, these hyperscalers and have spent cumulatively, how do you say that?
Cumulatively.
I already said that word 20 minutes ago and I nailed it. I couldn't say it this time around.
Right.
Cumulatively. One Bill's just laughing at me over here, Guy.
Bill's a funny guy.
No, he's fine. You know who else is doing fine?
Amanda.
Amanda's doing fine. Cumulatively, $1 trillion. I mean, of course it had to add to, you know what I mean? And by the way, we're getting to the point where, if you're listening to kind of some of these Meta and stuff like that, they're talking about all the productivity gains they're getting with engineers, basically with, AI and all that sort of thing. So we're going to see the other side of that. But I think there was a huge ramp up in also hiring, and you know what I mean, associated with this, if you're building data centers and all the likes here. So this is big. I think it can only go one way, and you and Stu actually had a great conversation about CapEx too. I just thought this was visually very interesting.
No, you have to see it visually, and we're at historic levels in terms of the meaning, how meaningful it is to overall GDP. I don't know what my takeaway is, but I think you just sort of hit the nail on the head. And Stu talked about it as well. And the word we have used now a few times is the sanctity of CapEx. By the way, this is what Cece said earlier in terms of the bearish side of the buybacks. The bearish argument may be that it's pulling from CapEx in terms of the amount of buybacks. We'll see. Real quick, because we have some questions, and I didn't see any news. I'm sure you did. What does open AI news mean for the AI trade? Good, bad, nothing new. That's from Valentine.
Great question. So, Elon Musk was one of the co-founders of this nonprofit. Okay. And the whole point of this, and by the name Open AI, they wanted basically to open source all of their, kind of build towards what they think is AGI. This is basically a GI, an AI that is basically equal to or surpasses human intelligence and the like. And this is something that all the nerds, all the sci-fi folks have been working on for a very long time. So a bunch of the biggest nerds in Silicon Valley, I think Elon put in $100 million to co-found this organization. And what happened is he was really getting frustrated, I think, with certain sort of views. Some, they talk about this benevolent AI. They want one that's there to do good, right? I mean, there are plenty of risks here, right? It's not like the sci-fi crap that the thing could go wrong and it turns into Skynet or anything. It's more like how governments may harness this technology, right, for a whole host of disruptive sort of things, whether it be in physical sort of weapons and the like, or whether it's, cyber attacks and this and that, whatever. So a lot of that stuff has kind of been going back and forth. And the whole idea with OpenAI and Sam Altman, who's been the CEO here, is like they were a nonprofit. He wanted to, they took this Microsoft investment. This was $13 billion in two kind of slugs. This was in 2022 and 2023. And it was clearly going to a more profit-oriented sort of thing, but it's meant to be a nonprofit. Elon's pissed about it. Elon started XAI. Elon's been suing OpenAI. Microsoft and OpenAI, their relationship starting to fray a little bit. So a lot of things going on here. I'm not sure it changes much because the company has been able to get to where they are right now, which is a massive driving force in the global AI space as a sort of nonprofit. They obviously do make money on subscription fees and APIs and all this sort of stuff. But to me, it doesn't change much yet because I'm assuming that at some point there's going to be a very strong commercial side to this business. If that
well done. Cogent response. This is from William PMCD. If gold continues the trajectory, what does it mean for other commodities? Okay, I'm not looking to dance around your question, but this is my answer. I understand that people view gold as a commodity. I am not one of those people. For me, a commodity is something with an end use: soybeans, corn, heating oil, gasoline, crude oil, zinc, copper, you name it. Gold to me is although labeled a commodity, is something entirely different because it really doesn't have an end use X jewelry. So it's telling a much different story. So you can be bullish gold and bearish commodities in this environment, and it makes perfect sense. And especially if you think there's some global slowdown going on, it makes sense to think that commodities could falter despite the fact that the dollar's lower and gold continue to go higher. So I think gold, this is just me, I think gold has divorced itself from the other commodities.
Dude, this 2-day move. So we were talking about VIX, we're talking about 10-year. You got to throw gold in that conversation because to see this sort of move, if you see that ramp from early April, where was it? It was just below 3,000 to 3,500 in a matter of 10 trading days. And that was obviously some of the worst days in the stock market to the downside. And now you saw it come off. That was a bit of a, just like the VIX had come off, right? Just like the yield in the 10-year had come off. This is the thing of those three risk assets that, to your point, should be getting your antennas up, because why would it have this sort of 2-day move? The dollar's been stuck here at 99.5, the US dollar index. Crude oil has been stuck here around, 57. I actually came down to some lows. So that's the kind of relationship with some of the other commodities. If this thing were to blow out and make a new high, I cannot imagine that the S&P 500 guy is going to be stuck here at 56.34 or something.
I think that's right. I think, and that's sort of what we've been. Yeah, I think that's what maybe I haven't been clear enough, but I think that's exactly right. I mean, to me, gold is telling somewhat of an ominous story. Before we get out of here, a couple of earnings. Let's put up the earnings slide because Amanda made a great slide. By the way, she is doing extraordinarily well on this May 6th.
Yeah.
She's coming up to her due date, by the way. AMD and Rivian and Supermicro. Tomorrow, Uber, I think, they're going to move in Uber. It's up against a prior all-time high. But let's just break down the two of these names, AMD, the implied move, and Supermicro. Now, Supermicro is its own animal, and the implied move is going to be high because I don't think they know what's going on. But AMD, to me, is one to watch. And why is that? Because it's been, quite frankly, if you go back to March of last year, it's a stock that is not traded particularly well. So this was a stock that I think, Dan, made its all-time high around, 205 or something like that. It's it has been cut in half. It's bounced off the recent lows of about 84 or 83. Maybe it's even lower than that. But I think that's all it is a bounce. And the last couple quarters, in the aftermath of their earnings releases, the stock has not traded well at all.
By the way, Guy, the move, the all-time high on March 2024, March 8th, you ready for this, is 227. That was
Wow.
it
Okay.
today. And so, yeah, it was off the chart here. So you see where it is basically at $100. Just real quickly, we got that pre-announcement from Supermicro last week. It was a disgusting sort of guide. I cannot imagine that AMD is going to have a particularly great quarter. Lisa Su, though, was on Kara Swisher's podcast last week, which is interesting. I always find it interesting when CEOs are out there doing some media prior to their earnings, that sort of thing. Sometimes they're just setting up for disappointment. Sometimes they feel really confident. You just never know. Uber, I think up against that prior high is interesting. Disney, from a discretionary standpoint, going to be very interesting. We know that streaming at Netflix was fantastic. Let's hear what Disney has to say. I know that there's lots of, I know the Star Wars and the Marvel stuff, and they're rethinking a lot of those strategies. And that's one of the big reasons I think people have subscribed to that. Expedia, interesting to me, Guy. There's been so much talk about traffic or tourism to the U.S. being halted, whether it's Canada, whether it's Europeans. There was a staggering number. I think I said it last week. Maybe it was like, I heard it on Pod Save America. Maybe it's like $52 billion in travel to the U.S., a year or something like that. And that's been slowing down. So Expedia will be interesting to me. Oh, this is the last thing before we get out of here. So coming up in the elevator this morning, I just said earlier that Palantir was in our building. Did I say it? All right. I meant to say this. So I'm in the elevator and they're on our floor and on the floor below us. And there's lots of engineers. I mean, like you and I see them, and we could tell the engineers. And I'll just say this, don't take this the wrong way, because you know who you are. And it's just a sign of respect. They're fucking nerds. Okay. Like, let's just be clear. You can spot them from a mile away. There's a whole thing. You know how you hate the Wall Street bros and the vests and this, you can tell an engineer from a mile away. They're brilliant guys. Okay. And gals. There's not many gals. So I'm in the elevator on the way up, and there's folks going to that floor. So I know they're working at Palantir. Right. And there's these two women, and they are not dressed like engineers. They could be in sales. They could be a whole host of other things. I'm not trying to pigeonhole anybody, this, that, whatever. They're not engineers. I'll just be really clear on that. One of them had her phone out, and she's looking at the stock price of Palantir.
Did I lose you? Oh, no. I thought then she was going to say to you, "You're Dan Nathan from CNBC's Fast Money and the Risk Reversal podcast. What do you think about the stock here?" I was waiting for the punchline. Oh,
the two women were looking at the screen back and forth. The stock was down 13%. Like, those are the sorts of things, bookmark it, or what do you say? Like, I remember,
put a little tab in there.
I remember, you ready for this? Notes. I remember sitting, this used to be a really hot place in 99, 2000. I haven't been there since 2000. Remember Bond Street Sushi on Bond Street? It was kind of a hot sushi. There was Nobu, and then there was Bond Street. And I'm sitting at a table after work one day. The market was raging. It had not topped at this point. No one knew it was going to top when it did top in March of 2000, that sort of thing. And these two women sitting next to us, they are not on Wall Street, not on Wall Street. And they were talking about Yahoo stock and Qualcomm stock. And I was like, holy shit. You know what I mean? This is not good. Once it takes over the zeitgeist, am I right? In a way, it gets a little dangerous.
The guys that fixed my car in the West Village had set up for a trading desk in their shop in 2000. That's from CC.
Wait, what?
So apparently, he was pointing out the absurdity of some of these things.
That's true. I remember.
By the way, Novo interview is premiering on YouTube after we.
All right, so we got to get off.
Hold on, but now you said about what were you doing last night?
What do you mean? What was it? I was watching the Knicks Celtics game. It was game one.
The Knicks Celtics. Knicks, by the way, have now won 4 road playoff games. I don't think they've done that in 30 years. But what were you wearing?
I was wearing my Meta AI glasses. I was recording. But, listen, what? You think that's kind of nerdy? Is that what you think?
I didn't think anything. I'm just asking a question.
I was at a concert. I was at a concert Sunday night, and I put them on. I don't like to take my phone out and this and that. I like to be in the moment, that sort of thing. And I put the Meta AI glasses on. You press the button, and it's recording. It's pretty cool. So I get a little clip, and then I move on. All right. So that is all right. So we talked about Wall Street douchebags wearing their vests. We talked about the nerds who are the engineers at tech firms. And now you're talking about podcasting nerds who wear Meta AI glasses. Is that what you're saying? Are those the three categories?
Yeah, but now I'm reading a text that I don't even understand what
Yeah.
this means. So
Okay. Should we
no, I mean, anyway, I'm totally confused. I mean, a lot of things waking up confuses me.
really
So
at your age?
at my age,
Tim Seymour's birthday, guy. Did you tweet that out?
I tweeted it out earlier. I wished him a happy birthday last night on the show.
Oh, you did?
I will wish him a happy birthday tonight in absentia. By the way, in Fast Money tonight it'll be Dan, Nathan, G Swizz, and somebody else.
Oh, Michael Schumacher.
Oh, Michael Schumacher.
Yeah. Who's he?
Wells Fargo. You know what? Michael's good.
Oh, is he the guy with a gargoyle behind his head?
Well, hopefully he doesn't.
All right, hey, really quickly, because I know we got to get out of here. So for the Fast Money Live, the other thing that we were going to do, so for any of our viewers, listeners who actually buy a ticket, send a screenshot to Amanda@riskreversal.com, and we're going to
blow her ass up.
We're going to send out a really cool risk reversal swag setup.
We have some badass swag, and we're gonna look at that.
Yeah,
and we're gonna get those T-shirts made up.
Oh yeah. All right. Let's listen.
Interesting.
By the way. What are the other ones?
Interesting. Have at it, people. I mean, I think that'd be fun.
All right. Well, Timmy's on it. All right, we got to go because that thing is the Novo thing.
The Novo thing's going to drop. By the way, we're sitting down with Butters in a few minutes. I mean, this is a crazy freaking day.
All right, we got a lot going on. All right, we'll see you, peeps. Thanks.